Okay, hello traders, this is the Wolf with another tutorial video on the market pressure series, and in this video we're going to look a bit more at market pressure, and I'm going to share with you a bit more tips on how to understand and identify market pressure or the direction of the market, and how we're going to do some pressure trades based on that. So before that, let me do the risk warning. Your invested capital may be at risk. Do not trade with money you cannot afford to lose. And this video is not an investment advice. Okay, currently we're on the Wednesday GBP JPY on the live market. So let's plot some key levels first. So I've plotted this very major key level 1.470000. You can see market is now currently playing around this area, and we have this body reversal level here, which actually was able to change the direction of the market from a downtrend direction. So you can see the market going down till this point, and then you have a change in direction. So currently you can see that this candle, perfect wick touch on the round level, shows that we should be going higher. So let's see. Oh, missed entry. You can see that was an example of a strong pressured candle. Okay, so in this tutorial I want to cover with you certain things. Okay, and one of the most important thing that you need to understand when dealing with market pressure is you need to understand that failure shows you pressure. Okay, what do I mean by failure shows you pressure? When you have an expectation of a certain candlestick pattern or a continuation pattern, or based on support and resistance, it's supposed to continue but it's rejected, reversed, or something like that, it shows you pressure, because pressure is the only thing that can make your setup fail. You need to understand this. So like for example, if you are talking about for example a Morningstar setup and it didn't unfold, why? If you're talking about a continuation but it didn't continue, why? So the very simple answer to the why is there is pressure in the opposite direction. So when you see things like that in the live market, it actually shows you pressure in the opposite direction. So most people only look at successful setups, successful formations, successful continuations and all this kind of stuff, but not many traders look at failure, because the failure is there to teach you something, and in this case failure shows you pressure, because you've probably heard many pros say that candlestick analysis is only 60%. So what is the balance 40%? It's a few other things, but what makes that 60% fail? Why is it only 60%? The answer is pressure. So I hope you understand a bit about that, and I hope I can show you a few examples about what I'm talking about. So let's put in the EMA and BB lines, and you can see from here the uptrend started, and I'm just going to show you one or two trades based on pressure, based on failure. So now when you see a failure of a certain pattern or expectation, it shows you pressure. So those are the kind of setups that you can take when you see a confirmation of the pressure, when it fails, how it fails, based on live candle analysis. So you can see this candle. So market is going up, 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 and then you have this huge spinning top, but instead of breaking the EMA, it was actually contained. So based on the spinning top, we are expecting a red candle here, and you can see It's not forming as a red candle because of pressure. So pressure, instead of reversing the candle, it's actually triggering a strong green buying candle. And this is what I want you to understand. So most newbie traders, they always fall for this. So okay, they see, okay, market is going up, 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 and then they see a spinning top. Okay, put. They will put on this candle and they will lose, cry, and blow the account. So this, you need to understand what's happening. So you can see strong buying pressure in the market. So I decided to make this tutorial to give you a bit more explanation and understanding of market pressure and why is it so difficult. You know, a lot of traders tell me it's very difficult to spot market pressure, but actually it's very easy, because anything that fails shows you pressure. So it's just a matter of understanding the direction of the market and to do your trades following the direction or the pressure and also the trend, because they actually more or less mean the same thing. So the direction is caused by the pressure, the trend in a particular direction is also pressure. So I hope you guys understand where I'm coming from. Let's see if the market can give me an opportunity to actually show you one or two trades before I end this tutorial video. So currently market is still going up. You have a good hammer, but you have strong rejection from below. So let's see. Buyers are trying to come in to continue the upward pressure. And you can see the live candle is starting to slow down. So we just need to wait for something to happen. Okay. So you can see the direction is still upwards. Speed of the candle, live candle analysis, also shows you pressure. The faster the candle forms in a particular direction, the stronger the pressure is in that particular direction. So probably let's see what happens around the 100 EMA. The 100 EMA is turning flat. So let's see if we can do a continuation based on pressure. Okay, kind of like a consolidation area. So let's see. Okay. So I hope to end this tutorial video with this trade. The best entry point would be from this support here, but you can see clearly the pressure is upwards. This candle broke the 100 EMA. This candle opens above the 100 EMA. So the 100 EMA should now act as a support to trigger the buyers further up into the market. So let's see what happens. We still have 15 seconds. So I want you guys to understand this is another pressure series which I want you to understand. Failure shows you pressure. Failure shows you direction. And with that, let me end this video. This is the Wolf signing out. Take care, stay safe, and bye-bye.